And I've got to be honest with you, the whole concept of family offices is something which is very new to me. It's something that I've only found out about really when I arrived here, and it's something that I'll be listening to intently. So as I said, some of the guests that will be joining us as well a bit later will be hosting the last set of pitches. Now, I did say to you, after 6, we're going to have those awards. We'll be handing out the prizes. We still have one more round to go. We've got a couple of judges. Some of the judges will change, but some of those judges will be listening to the 5-minute pitches. They'll ask the questions. They'll make the final deliberations and decide on the winners. That'll be coming up. So, ladies and gentlemen, I'm going to keep quiet, and let me say, please put your hands together for the country manager for You Start, Vittorio Mauri.
Thank you very much, Kino, for the introduction. Thanks for being here, and good afternoon to everybody. So I'd like to call on stage our special guests for the panel, Mr. Nicolò Miscioscia. Welcome. Then Mr. Giorgio Valaguzza. And last but not least, Mr. Rafael de Haro. So please, take a seat. Thank you very much, guys, for being here. I think, actually, we have an amazing panel to discuss. I would like to start from, of course, a presentation from yourself. So if you could spend some words about who you are, what you do in life, and why you're here today with us. Nico.
Yeah, so I'm Nicolò Miscioscia. I'm head of advisory for You Start. I also manage a part of the family office of my own family. I approached this You Start because of VC investing. So we are doing investments, especially in e-commerce and marketplaces and consumer-facing businesses. And since 1 year, we're running You Start Advisors in order to help other family offices or private investors to discover and uncover the secrets of VC investing.
Giorgio.
Ciao Vittorio, hi, I'm Giorgio Valaguzza. I am Managing Director at Ithaca Investments, which is the venture capital arm at an Italian family offices. And I joined the family office 3 years ago when they decided to pursue direct investments within the organization. And we started with investing mainly in Italy. Then we decided to go outside Italy and try to find opportunities around the world. That's why we partnered with You Start, and You Start is one of our advisors in bringing deal flow to our family office.
Thank you, Giorgio. Rafael?
It's working. Yes, there. Hi, my name is Rafael. I am a partner at Barif Capital, a venture capital fund based out of Mexico City and New York. We do essentially early stage technology investments in Latin America and also in the United States and Europe, strategics. We're also shareholders of You Start, and although we're a venture capital and not a family office, in some way we act as a vehicle of investment for a family office.
Thank you very much. As you understood, we know each other pretty well. So, okay, let's start from the very beginning. So, well, from my experience, what I've heard a lot about family offices, like there is a lot of people talking about family offices, you know, startuppers talk about family offices, they claim they invest in venture capital as well. The point is, what I've experienced in my life is the fact that many people talk about family offices but do not really know what they are. So my first question to you, Nicolò, is what is a family office? And what's the difference between a family office and other traditional institutional investors?
So a family office is, generally speaking, a team of people dedicated to the management and administration of the assets of a single family. The services they provide are various, from the control of, for example, costs, of banking institutions that provide services to the family, to the review of the investment strategies, to legal planning, succession planning, the management of physical goods of the family, such as cars, houses, boats, and planes. And what makes it different from an institutional investor is that they act on the behalf of one single family, while an institutional investor normally collects the money and the assets of many investors, which they invest on their behalf. There are other actors in the family office industry, such as multifamily offices. These institutions have the role of family offices for a small group of clients. They normally have more management and administration competencies, and they provide services which is somehow tailored, more than what a bank could do, for example. But generally speaking, a family office is whenever a family has some private capital to deploy and someone is actively managing these assets, could be regarded as family office. In my case, from my family office perspective, we have a very lean structure. We manage mostly real estate assets. We review the costs and the strategies of traditional investments, and we are only actively investing in the private equity and venture capital stage.
Thank you very much, Nicolò. Giorgio, is there a minimum size to define a family office?
Well, it really depends, as Nico was saying. If you divide into two macro categories, one is the multifamily office and the other one is a single family office. I read a very interesting report from UBS a couple of weeks ago that was saying that basically to set up a single family office, you must have approximately $150 million of assets under management, which I tend to agree, because with that amount of money, of assets under management, you basically are structured to set up a proper function for each kind of investment that you want to pursue. Otherwise, if you don't have the single power to set up such structure, you can, of course, leverage on synergies that you can create by putting together assets from different families. That's what a multi-family office is for. So basically, given that it's not very uncommon to find first-generation entrepreneurs setting up family offices, generally it's more of a second, third, fourth generation. And it really depends on how many households do you have and generations. So basically, the complexity of a family is basically one of the main drivers of setting up a single family office.
Okay, thank you very much. I'd like to ask something to Rafael, because I believe the position of Rafael here today is very important, as Rafael represents a different geography with respect to Nicolò and Giorgio, especially because he deals with family offices from Mexico, which is an emerging market, so totally different environment from Europe. So my question for you, Rafael, is there any difference in the structure of a family offices in an emerging market rather than in an already developed market, such as any European market or the United States?
I think that with the exception of really big family offices that act as their European or American counterparts, I would say that the rule is that family offices in emerging markets, specifically Latin America, are less sophisticated in their strategy and structure. And therefore, you would find that most family offices in these regions usually allocate their investment to traditional asset classes like real estate or capital markets. So you see very little, if not very few, family offices that are actually focusing on asset classes like venture yet, which is good news because there's room for opportunity, but there's still a long way to go.
Very interesting. Rafael just mentioned the assets under the management. So, Giorgio, what are the usual assets under management from a family office? And is there any ideal portfolio allocation of assets, or anyone has its own strategy?
Okay, starting from the point that I believe that every family office have a stay-rich approach, which means they don't want to lose their wealth. It really depends on which strategy they want to pursue. We can divide the strategies into three main strategies. One is growth, the other one is a balanced approach between growth and preservation of your capital. So These three strategies really depend on the asset under management that you have. So basically, the more of assets you have, the more growth approach you can have in terms of having a riskier approach to your investments. Typical asset classes are real estate, direct investment into real estate, so maybe also old properties that the family owned and has owned for decades. Another typical asset class is developed market equities and developed market fixed income. I mean, those are the main traditional asset classes and the less riskier. In the last years, we have seen that more family offices are taking a more riskier approach, investing into hedge funds, private equity, and into direct investments, so bringing and buying equity into companies directly. And this is approximately between 8 and 10% of their portfolio assets. And of course, cash is a very strong component, given that, cash is always needed for, expenses into the family.
Thank you very much. Nicolò, always in terms of portfolio diversification, do usually family offices invest in the markets where they have their backing assets, or they prefer to invest in new markets, actually to balance maybe the exposition they have towards some markets?
Well, the geographical scope of the investment of family office depend largely on the structure of their family office and the competence of the team. Mostly family offices rely on invest locally because they rely a lot on local networks and local partners. There is an increasing, we see it also with YouStart, an increasing need and desire of investing elsewhere. There is a big interest in emerging markets. These are markets which are more difficult for a family office to approach because of the less institutional and sophisticated team that they can have. What we provided with YouStart is, for example, a solution with local teams to give physical proximity to families, to control the investment and to make investments also in emerging markets. Overall, I don't think, I think geographies, families are starting to invest more and more internationally. Although I don't think geography is the main driver of an investment, they rather look for a good investment. There might be situations where a family, given their probable industrial background of the established families in Europe, for example, they can find synergies in investing elsewhere. So, for example, opening new markets or acquiring technology abroad. This could be a reason for investing in other geographies. Overall, as a trend, especially with YouStart, we are seeing that more and more families are more confident in investing in emerging markets, and there are great opportunities arising from these countries, and including here that we saw during the whole conference, the level of startups and businesses which are built in these markets.
Thank you very much. I think this was a very good overview of the family office world. I'd like to shift the discussion a little towards investments in venture capital. Again, from my experience, I've seen that young entrepreneurs usually look at accelerators and incubators or even venture capital funds for their fundraising, while more experienced entrepreneurs prefer to work with family office. This is something I noticed, and that actually made me curious. But before going that much into details, the first question I would ask, again to you, Nico, is why do family offices look at startups? What do you see in startups?
Well, the first obvious reason that I think everyone shares here is that startups is an exciting market, not only in terms of returns that we are seeing amazing exits, but also in terms of the energy that there is in this sector, the passion that there is in the sector, the fact that we work with entrepreneurs So we have to remember family offices, the first generations probably they were entrepreneurs, so there are entrepreneurial roots in family offices. This is like very much liked. Also, there are other reasons for investing in venture capital, which can span from the perception of the increased opportunity cost of not investing in venture capital, given the great exits that we're seeing, the great multiples that we see, the most famous ones in the market. There are sometimes some fiscal reasons also, because there are countries which are incentivizing a lot the investment in startups. For example, in England, in the UK, but also in Turkey. I was in Turkey last week at Webit, and you can deduct in Turkey, I think, around 75% of your investment, or maybe 100% of your investment in startups from your income tax. So it makes it basically cheaper for an investor to invest rather than not investing. Startups also are usually, it's a good value in terms of valuation. It's easier to have some kind of control in the startup with a direct investment. So I think these are the reasons, and technology is changing greatly the way we're living. Through investing in startups, families, private investors can access to technologies which can be used not only in their normal lives, but probably also for their own business. So I guess these are some, but there are many others, but these are some of the reasons why families and private investors are increasingly seeking opportunities in this space. They normally like to work, by the way, with entrepreneurs. This is, I think, one of the reasons why entrepreneurs like the idea of having these family offices on board. They like to be involved and be active and supporting, strategic somehow. And at the end of the day, this role, despite being riskier investment, it provides eventually way higher returns for the investor.
Thank you. Rafael, in your experience, what are the different approaches and solutions that family offices can adopt once they decide they're interested in early stage investments?
The different approaches and solutions once they made the investment?
No, once they decide they want to make investments in venture capital.
I think it depends. For example, in our case, what has worked a lot, and as has been mentioned several times on this stage, is it depends on the line of business in which the family is in. They can add value more in kind besides the capital they invest. For example, in our case, there are large media assets where we can provide media for equity deals or similar services. So I guess I would say that beyond the capital investment, what's interesting for entrepreneurs, and this is where entrepreneurs should pay attention which source of capital they choose, is what line of business is the family in, and what can they contribute to the deal besides capital. Right?
Okay. And in terms of models or structure actually that family office can have when approaching venture capital, is it always the same model applied, or there are different models?
I think there's your traditional sort of approach of any family office that Nico and Giorgio have totally mentioned. And then also I think there could be some sort of proxies for family office, for instance, corporate ventures. So that's more in the company side, but if it's a family business, say, in media or finance, and they have corporate ventures, it could be a proxy for investing the family capital, although it's part of the corporation. And then our case, for instance, in which it is a fund that is not related initially to the family, but once it starts to become relevant, the family business sees it as an effective way to sort of buy their way into innovation. So I would say it's the traditional family office, corporate ventures in some shape or form, and finally a fund or something that is outside of the family scope, but then it gets annexed into it because it starts becoming interesting, especially now in technology, which is such high growth.
Thank you. Giorgio, in your experience, what are the advantages that a startup, a company, takes from being invested from a family office?
Okay, talking about my experience, I mean, the family I work for, the traditional business is media. So, and within the organization, we cover, I mean, most of the spectrum of investments. So, starting from seed, VC to growth stage investments. So, basically, our approach is always bringing on the table not only cash, which is a kind of a commodity right now because the market is very liquid, but we can also provide network within the countries where the traditional business is present, so Italy and Spain, and also media. So basically leveraging on the media asset that the family owns, we can provide them, you know, especially for, I mean, every business that is related to consumer. So every consumer business is what we look, generally we look for, investment in the consumer space. So in that case, we can bring on the table a lot of synergies with the media assets. So we can promote the company through the media assets that the family owns.
Okay. Does it always happen also the other way around? So the company bringing a real value to the asset behind the family office?
Well, in our investment scope, we generally try to find, of course, companies where we can bring the value add. And given that most of the startups and the companies in Italy know that we can provide that value, we have been very much approached by those kind of companies in the last couple of years.
Okay. And in your experience, Nico and Rafa, what is the value you feel you have brought, if any, of course, into the company you have invested into?
Well, in our case, I think it's been largely, as Giorgio said, it's been network and specifically the media for equity deals. But to your point on companies that actually add value to the family office, again, more than the family office, I would see it as a family business, is they could integrate, for example, or as I said, buying their way into innovation, integrating these new disruptive technologies into their business model through startups as opposed to through acquisitions at a later stage. So that's the way I think that startups could add value to family offices and their family business.
Thank you. Nico, do you have anything to add?
Yeah, in my experience, is mostly some commercial advantages or synergies. For instance, to make an example, we have been investing lately in a company active in the sharing economy sector, and we were able to provide them the introduction with one of the major luxury groups in the world, and in the space of 2 weeks they were able to close a deal, and now they can present on the site a specific service together with the brand. I think that was pretty strategic in the positioning of the brand, and something which was made possible in 2 weeks just because of context, so network.
Giorgio, what relations do you have with traditional players of the venture capital ecosystem, so basically funds?
Okay, so when we started 3 years ago, I mean, the main problem that we faced was, getting into the ecosystem. So we started going around to every conference in Europe and all over the world, trying to, with business cards, giving business cards to the main actors, mainly VCs. We started in Italy, as I was saying, and the Italian ecosystem, as of now, is still very small. So it's very difficult to have a relationship with, it's not difficult to get in touch with VCs, but it's difficult to start a relationship because, I mean, they're always in fundraising and they perceive us more than an LPs, more than, a peer, right? So they first ask for money and then they say, okay, if you become an LP, then we can start sharing, deals. On the other side, European VCs and US VCs, they already see the potential value that we can bring on the table, right? So media plus networking. Because, I mean, they don't have any presence in Italy or in Europe for VC funds. And, I mean, having a partner like ourselves, brings to them a lot of value and a lot of time saving in, getting to know the right people in the Italian ecosystem or rather than the Spanish one. So basically, getting back to your question, we now have a very good relation with most of the biggest US and European funds. It took 3 years, but still, I mean, we're now
So correct me.
perceived as, you know, a real value add for them and for their portfolio companies.
Correct me if I'm wrong. What you're saying is actually that the higher the competition and the better it is for you, as you're not perceived as a potential LP, but rather as someone that could add a real value to the company instead of pure money.
In some private equity growth in Europe and in the US, that helped, of course, in, you know, starting a relationship with them. But I mean, as I was saying, we have been perceived as, you know, door opener and facilitator for some markets for them.
Thank you very much. Nico, how do you see the venture capital industry in Europe?
Well, the European scene is pretty lively, of course, after the Silicon Valley. But there are hubs which are exploding, not from now. It has been a while, such as, for example, London and Berlin, to name the two most active, but also Scandinavia, for example. There are nice ecosystems also in other countries, such as Italy, France, and Spain. The opportunities that come out are a bit less constant in terms of quality and quantity. The new also European countries and also Eastern European countries are becoming increasingly interesting for investors. Mainly because, as we could see, and I repeat myself, but the technical competence that we see here is pretty amazing. And the internal markets of these countries is also increasing in terms of purchasing power. So both for a strategy of market expansion and for acquiring new technology, making investments in like Eastern European countries, it's starting to make lots of sense. And many family offices, to go back to the whole Europe picture, invest in Europe mostly because also the contacts are in Europe. It's not as easy as it is for an American to invest in the US because every country has its own regulations, although Europe should provide a more standardized framework. But it remains one of the main areas of interest for the families, especially the ones we work for.
Thank you. And you, Rafa, how do you see the ecosystem in Latin America and also in Northern America, so United States and Canada?
Well, I think Canada and Latin America are a different animal. The US, of course, with Silicon Valley and clusters like New York and Seattle are sort of, you know, at the top in terms of venture capital investing. In Latin America, we see most VC deals driven by largely Brazil, where you also have American presence of American US funds. And then in Mexico, which is probably the second largest ecosystem after Brazil, you start seeing the presence of American funds, like, for example, seed stage, like 500 startups that actually their first international venture was in Mexico City. And now larger funds looking into it. I would say Mexican funds, you have the ecosystem is still small, so there's still a long way to go. But what's really interesting is that you see entrepreneurs from Latin America seeking financing options both in the US because of its proximity, but also in Europe. So a lot of Latin American startups being funded in Europe and vice versa. European startups being funded in Latin America. So you might think, you know, this guy is from another completely different region. Why is that interesting to us? And I would say, just as Fred Wilson, a very successful US venture capitalist, once said, if you have a good business today, there's no excuse to not raising capital, because if you can't do it in your market, you can seek capital abroad. In this case, in the shape of family offices or VC funds in other markets, including as far as Latin America.
That's very interesting, especially in events like this, because it means that cross-border investments are actually increasing, correct? Very good. So I see we're about to run out of time, so I'd like to make you a very quick question to the three of you. So the first one is, what's your average ticket size? Nico.
So I give you two perspectives, my personal investment perspective and experience that we gain with the YouStart Advisory. Personally, we invest mostly tickets from 25k euros to 250k. And our families, the families we serve, range a lot from small tickets like 25 to, let's say, a couple of hundreds for seeds, and they go up for, they can go up to a few millions for growth investments.
Thank you. Giorgio?
So growth stage investments from 2 million to 10, and for also seed investment, Series A, it's for 250 to 2 million.
Rafael?
We do pure seed from 50,000 to up to $1 million.
Thank you. What industries?
Again, me personally, focusing on e-commerce and marketplaces, especially now we are following all a strategy in the food and beverages market. The clients we serve, a bit of everything. Of course, all this space, consumer-facing businesses are much easier understood by also non-professional investors, so they tend to prefer this kind of investment if they are especially new to the market.
Giorgio?
Very opportunistic, but I mean, we invested the most in marketplaces and e-commerce, given also the background that the family has.
Rafael?
We do mostly e-commerce and fintech, with some exceptions that are strategic to other portfolio investments.
Thank you very much. We ran out of time, so thanks for your participation.